Hi believers, this is Amit from Waya team, bringing you a weekly update on what's happening in the markets. Last week, our market saw a lot of action. The Nifty index dropped by 2%, while the Bank Nifty saw a bigger fall of 3%. Mid-cap and small-cap indices also took a hit, falling 3% and 5% respectively. What's the reason behind this fall? Well, the foreign investors, FIIs, sold equities worth of 19,000 crore. Like everyone else, they too are worried about the uncertainty in the upcoming election. This uncertainty has pushed something called Volatility Index, VIX, way up. It measures how nervous the market is. The India VIX has moved from a low of 10.2 on 23rd April to around 18.4 currently, the highest this year, indicating that the markets are worried. Let's look back at the previous election. During 2019, the VIX climbed from 14.9 to 28 in a month. Therefore, as we move closer to election, we may see the VIX rising further. Basically, the markets do not like uncertainties, and there's always an element of that during the elections. Besides elections, the markets were also trading at high valuation, which also dragged down certain stock prices. We think the market won't really pick up until the election results are out. The other events that are lined up post-election are the union budget and the RBI policy indicating lowering interest rate. The latest RBI survey indicated that the expectation of a rate cut of 25 basis point in Q2 of the current fiscal year, followed by another one in Q3, thereby pulling down the repo rate to 6% by the end of the current fiscal year. Technically on charts, the Nifty index has support around 21,800. A break and close below this level, we can see Nifty to correct easily till 21,300. The RSI on the daily and the weekly chart is showing loss of momentum, indicating there could be a selling pressure on pullback moves. Within our investment universe, companies have reported good earnings growth, along with strong margins. Any weakness will be the buying opportunities to add these stocks for medium term in the portfolio. Globally, markets in US and Europe rose as the data release suggested that the labor market is cooling and economy is slowing. This might lead to disinflation, paving way for rate cuts in the second half of 2024. People are expecting some rate cuts this year, which could shake things up for the better. To sum everything up, as long as Nifty maintains 21,800 level, we should hold our positions. If it goes below this level, we will inform you action required on the recommendations which we have given, depending upon sector, earning growth, support levels, and corporate guidance. That's all for today. Let's wish ourselves for a better week ahead. Thank you.